There are many different ways to make money online, and it can be hard to know where to start. One way is through the use of spread betting and Forex, both of which offer a high potential return on investment. However, before you get started with this potentially lucrative form of trading, there are some things you need to know about it first. In this video, we will discuss what spread betting entails. Before we start, if you want to learn more about making long-term money, then subscribe for our weekly videos on making money online for the future. What is spread betting? Spread betting, as the name suggests, involves spreading your bets across multiple assets and financial markets. I believe spread betting is a good tool for seasoned investors, but it may be wise to exercise caution if you're new to the world of finance. Spread bets allow you to trade the movement of underlying assets using derivative contracts. Because you can buy or sell the derivative at the spread bets firm's prices, it feels as if you're investing in shares and other assets directly. Note that individuals do not own the underlying asset on which they wager, for example, a stock or a commodity. Spread bettors simply gamble on whether an asset's price will go up or down based on prices supplied to them by a broker. Spread bets are similar to stock market trading in that two prices are given, one for the buy side, bid price, and one for the sell side, ask price. The spread is the difference between the purchase and selling prices. This spread is what allows for spread bets to be executed without fees, unlike most security trades. How do you make money spread betting? Of course, all spread bettors want to make money. While spread betting is quite simple to understand, it still takes effort and study to figure out how and why the underlying markets change. After all, spread betting is simply a method. To profit, you must first bet in the proper direction and then take profits at the correct moment. It's also a good idea to create a demo account to get you started. Most brokers provide demo accounts so you can test the trading platform, experiment with various approaches, and get a feel for everything before putting real money at risk. The last thing you want to do is waste your hard-earned risk capital learning something new. Make sure you get the most out of your demo account. While learning the platform, it's acceptable to hop in and out of various markets. But after that, treat the demo as a real money account. In other words, think about the foundations and technical setup before you place a dummy trade and learn how to utilize stops and limits. Once you're ready to move on to the real money in a live account, begin small and build your confidence gradually. The learning curve takes time and effort. However, if you follow a few easy guidelines, you will quickly construct a solid foundation on which to develop your account once you've acquired knowledge and expertise. To start with, it's more beneficial to focus on two markets rather than many. This is so you can learn about how various markets function and react to news flow, economic data announcements, and trading levels. You must also develop a trade strategy. Professional traders require a solid trading plan to ensure that they can keep the good run going for as long as possible. This is just as true with spread betting, any other trading vehicle. Even if the world's best traders don't always win, as a result they make deliberate efforts to preserve sufficient risk capital even after suffering a loss or series of losses. They do so through intentional money management. This implies breaking down your trading capital into smaller pieces. You only risk a portion of your funds on any one trade if you do this. It's up to you how you divvy up your risk money. Some experts recommend risking no more than 1% on any trade. Others say it's possible to go as high as 5 or 10%. Obviously, the less risk you accept, the more trades you'll be able to make. Tip 1. Treat it like a business. If you want to make a career out of spread betting, you're essentially starting your own company. As such, you should think of it as if you were starting a business. Most firms take years to develop a solid foundation and become consistently and significantly profitable. Your spread betting firm is certainly unlikely to be any different. As a result, before withdrawing any money from your spread betting firm, you should either have enough cash to last for at least a year or start your business as a part-time project while still having access to another source of revenue. Having enough money to establish your spread betting firm is likely to assist you achieve success, since it will allow you to avoid feeling compelled to be profitable on each spread bet trade from the word go. Tip 2. Create a business plan. The next stage is to develop a solid business plan. Finding and adopting a successful spread betting trading method is part of creating a business plan for spread betting. It may take some time to discover which trading method is A. profitable and B. one you're comfortable with using. Choose the right spread betting company. Another aspect of your spread betting company plan is the firm you select for spread betting. Different spread betting companies have varying spreads, trading platforms, markets, and margin requirements. It's in your best interest to do your homework and discover as much as you can about the many spread betting firms before settling on one. Pick your market. The majority of successful investors focus their trading efforts on the financial instruments of a particular market. As a result, it makes sense to focus your own trading activities in the same manner. The reason for this is twofold. There are simply too many of them to trade for any one trader to keep track of all of them, much alone learn how to trade them effectively. Financial assets trade in different ways. Stocks, unlike commodities, do not follow the same trading patterns as forex or interest rates. If you have prior experience trading stocks or foreign currency, you may wish to use whatever skills and knowledge you already possess in one of those markets to spread betting. Alternatively, you may wish to blaze a trail as a spread bettor in a market you haven't previously traded. Regardless of how you choose to do it, it's critical to figure out which market fits best your trading style and study everything there is to know about trading that market. Important calculations. Here are some important calculations you must consider before beginning your spread betting business. Set income and return expectations. How much annual revenue from betting do you need to live comfortably, or at what level you want if you're looking to make a livelihood out of spread betting? What kind of return are you looking for from your spread bets on a daily, weekly, or monthly basis in order to produce that level of yearly income? That calculation must consider whether you're a day trader, a long-term trader, or somewhere in between. Accept that you will lose early trades. Practice makes perfect. It just so happens that, like fine-tuning any firm, good financial spread betting takes time, training, and work. Don't expect to be a market genius from the outset. Instead of aiming for perfection right away, set realistic goals and accept that becoming a great spread bettor necessitates growth over time. Allow early setbacks to you. Can you actually make money from spread betting? You can use spread betting to profit from losses as well, allowing you to make a living spreading bets. All that's required are the same elements that go into any successful business. To start up a new business, you'll need sufficient cash to get it up and running for the first year or two. Creating a clear business plan and a method for putting it into action. Taking the time and effort to make your company as successful as possible. In summary, you can make significant money spread betting and benefit from tax-free gains. But I believe that buying real shares or funds is a safer alternative. With a little work and thought, you can do well with equities over time without frenetic, leveraged and frequently short-term trading if you pick your investments carefully and adopt a company owner mentality.